1.93 USD. That is the precise flickering number currently lighting up the ticker for Datavault AI Inc., marking a push into the green by 0.040 cents, or a solid 2.12% in today's intraday session. At $1.93, the immediate expectation, the knee-jerk reaction from almost any seasoned trader scanning a list of sub-$5 stocks, is that this is vaporware. The market is conditioned to view penny stocks with an AI in their name as dangerous, likely dilutive, and fundamentally hollow vehicles designed to catch the overflow of enthusiasm from the major indices. You see a price under $2, you assume the company is running on fumes. You assume it is a story stock with no underlying mechanics to support the weight of its own press releases. That is the expectation. It is a safe, cynical, and usually correct assumption to make in the microcap space. But the reality of Datavault AI Inc. right now, in the final month of 2025, is violently contradicting that assumption. We are not looking at a company that is quietly fading into obscurity. We are looking at a company that has just radically re-architected its entire financial and operational existence in a way that is frankly unprecedented. While the skeptics are focusing on the penny stock price tag, the reality is that Datavault has just secured a massive war chest, not in fiat currency, but in Bitcoin, and has raised its revenue guidance for 2026 to a staggering $200 million. To put that in perspective, this is a company that was doing a fraction of that just a year ago. The discrepancy between the penny stock perception and the $200 million revenue guidance is the single most volatile dislocation in the market today. Let's look closer at this intraday move. The stock is trading up over 2% today, hovering near the $1.93 level. This isn't just random noise. If you look at the volume profiles on your Interactive Brokers trading screens or your Fidelity mobile app, you will see that the volume is consistent. It is not just one massive buy order spiking the price and then fading. It is sustained interest. This tells us that the market is trying to digest the sheer complexity of the recent news flow. We are seeing a consolidation phase after the massive volatility introduced by the Scilex holding deal. The stock is trying to decide if it wants to be a $1 stock or a $5 stock, and right now the bulls are defending the $1.80 support level with significant aggression. The Scilex deal is the elephant in the room that we must dissect because it is the engine driving this entire narrative. The expectation was that Datavault would need to do a traditional secondary offering to raise cash, selling new shares to the public, diluting everyone, and crashing the stock price. That is the standard playbook for small caps. The reality was a curveball that nobody saw coming. Scilex Holding Company, a biotech firm, didn't just invest, they executed a strategic equity financing where they paid in Bitcoin. We are talking about millions of dollars worth of Bitcoin transferred to Datavault's balance sheet. This does two things immediately. First, it capitalizes the company without the traditional banking fees and roadshow friction. Second, it aligns Datavault with the broader crypto asset narrative. By holding Bitcoin on the balance sheet, Datavault has essentially become a proxy trade for the crypto market itself, adding a layer of beta that makes the stock move in sympathy with digital assets. But why would a biotech company dump Bitcoin into a data AI company? This is where the data monetization thesis comes into play. The expectation is that AI companies make money by selling software subscriptions. The reality for Datavault is much more specific. They are tokenizing real-world assets. This is the buzzword you need to understand. They aren't just selling chatbots. They are building the rails to turn physical assets into digital tokens that can be traded. The Scilex partnership is about tokenizing clinical trial data, genomic data, and patient outcomes. In the modern economy, data is more valuable than oil, but it is illiquid. You can't spend your medical records. Datavault is trying to solve that liquidity problem. If they succeed, they unlock trillions of dollars in dormant value. That is the $200 million bet. Comment below if you think the concept of tokenizing your own data is the future of the internet or just another bubble waiting to burst. I want to hear your take on the ethics of this. We have to talk about the revenue growth because the numbers are startling. In their recent Q3 2025 report, revenue was up 148% year over year. That is triple-digit growth. Usually when a company grows that fast, it is trading at 20 times sales. Datavault is trading at a fraction of that multiple because of the trust gap. Investors have been burned by this ticker before, back when it was WISA Technologies, focused on audio. The transformation from an audio hardware licensor to an AI data monetization platform is so extreme that many institutional algorithms haven't even recategorized the stock yet. If you look it up on some legacy platforms, it might still be listed under consumer electronics. This categorization lag creates an opportunity for human traders who understand the pivot. The authorization to increase the share count to 2 billion shares is another massive point of contention. When shareholders approved this on November 24th, the fear was palpable. 2 billion shares? They're going to dilute us to zero. That was the scream across every forum and message board. And mathematically, the risk is real. If they issue all 2 billion shares, the stock price would theoretically collapse unless the value of the company increases proportionally. However, the contrarian reality is that you don't authorize 2 billion shares unless you plan to use them as currency for acquisitions. You don't need 2 billion shares to pay the light bill. You need them to buy other companies. This suggests that Datavault is planning a roll-up strategy, buying smaller data firms, integrating them, and growing through acquisition. It's an aggressive, high-risk strategy, but it explains the massive authorized share count. Let's look at the partnerships with Triton Geothermal and MTB Mining. These are not tech companies. These are heavy industry players. Why is Datavault signing deals with geothermal and mining companies? Because these industries are asset-rich but cash-poor. They have millions of dollars of minerals in the ground or heat energy under the crust, but they can't easily access capital. Datavault comes in and says, "We will tokenize your future production. We will turn your unmined gold or your ungenerated electricity into a digital asset that you can sell today." It's essentially securitization on the blockchain. The expectation is that Datavault is an AI company. The reality is that they're becoming a digital investment bank for the physical economy. They are using AI to verify the data, how much gold is actually there, and then using blockchain to sell the value. For those of you using Robinhood stock trading or managing a SoFi investing account, you might be wondering how to trade this. The volatility here is the primary feature. You are not buying a stable dividend payer, you are buying a call option on the execution of this new business model. The support level at $1.80 is critical. If it breaks below that, the dilution fear takes over, and we could see a flush down to the 150 level. However, if it holds, and if they announce another major partner like Scilex, the squeeze could be violent. The short interest in this stock has historically been high, as skeptics bet against the transformation. Any positive news forces those shorts to cover, driving the price up disproportionately. The adverse opinion risk is something we must address to maintain a balanced view. Like many rapid growth companies in this sector, internal controls and financial reporting can be messy. Investors need to be aware that when a company pivots this hard, the accounting gets complicated. How do you account for Bitcoin on the balance sheet? How do you recognize revenue from a tokenized asset that hasn't been mined yet? These are questions that auditors struggle with. This complexity adds a risk premium to the stock. It's why the stock is $193 and not $5. The market demands a discount for the headache of understanding the books. But let's pivot to the future outlook. Management's guidance of $200 million for 2026 is the North Star here. If they hit that number, the stock is fundamentally mispriced today. A software AI company with 200 million in revenue typically trades at a minimum of 3 to 5 times sales. Do the math. That would imply a market cap far higher than where we sit today. The bear case is that the guidance is a fantasy, that they are projecting revenues from token sales that will never happen. The bull case is that the demand for liquidity in the mining and energy sectors is so high that Datavault will have more customers than they can handle. The integration of Ask Sage technology or similar AI interfaces, if applicable to their roadmap, is another layer. While Datavault has its own tech stack, the broader industry trend is towards conversational data. Clients don't want a spreadsheet, they want to ask, "How much is my geothermal asset worth today?" and get an answer. Datavault's focus on data science and acoustics from their legacy business actually gives them a unique edge in industrial sensing. They can use sound data, acoustics, to